Welcome to TradeTheNBI.com. This challenge report is for the 17th of December. Well, broke out to new highs and created a lot of positive extremes intraday. And once the selling of those started post-Fed, because the realization afterwards is that, hey, rates are going to rise, and there's some sensitive industries that really need that money. But more importantly for us, the ABM yellow, which is the too fast there at 46.57. Above that, still long. Below it, though, start taking advantage of short option, as well as any move below the 46.13 is definitely a negative from the NBI reading. That magenta pivot lower puts us under the yellow, and the dip of white below 10. Positive from a weakness standpoint, not great from a long standpoint, and the rejection of green to cyan on the DOC. Though you still have short-term buyers pressing up and the orange dip, so there's still plenty of juice available for the long side of the equation. It's just whether they can sustain the kind of buying. And a lot of this is related to OPEX on Friday here. So, with 4,700 been the peg for the last, several option expirations, nothing is different even this time. So we'll see. They may play it above it or below it. It's close enough that they could do either side of it. YM not so much. The NQ was already weaker and clearly broke down significantly, all the way down to 61% level, so well below the ABM yellow from that standpoint, and didn't have the magenta really spiking above the 33, but just a fraction, and then immediately was starting lower, and now is also below NBI yellow, which that's a negative crossover, at least from a daily standpoint. And when we look at it intraday, we'll see how clean it was. And we talked about this was going to be a spike for gold because the delay of the Fed doing nothing, because that inflation is going to run rampant, and the only defense against that is going to be commodities in some form or another. Whether that will turn into crypto, that's a more interesting question, because it really hasn't related that way. Euro taking a bounce on the inaction of the Fed, because just talking about the fact that they're going to be rates and doing nothing interim just means that you're kicking it down, because then they could just say later on, oh, well, the environment's not right for it, and it's pretty much what they've been doing for years, so it's nothing's new, which is why the market likes it. From a USO, which is oil, again, probably going to see a rise, and I was expect a continuation on that. It's been in a little bit of a weak mode with the NBI white leading, but once the magenta got back above, that was enough to get its support riding through there. From a Bitcoin standpoint, so early on, captured the rise, took advantage of it, and then we started to get the breakdown early on, pivoted back up when the red moved back above white, so there was no weakness, but once that changed, which was right about here, that spelled weakness, continuation, and sure enough, that's still in that sell signal from right there, 48,740. What are we at? 48 even, so about 7 on that move. ETH obviously held up a lot better, but and above that 4K number, which I think is psychologically important, especially when it bounced back up after having dipped significantly into the mid-30s. I mean, you break that 3,000. There's going to be a lot of people panicking. This was a perfect read from the 50K Opus T2, capturing the bottom just after the peak selling, and then shorting that move and taking advantage of that. So it was nice, because a little bit longer runs is exactly what it looks for. It gets a little tweaked when there's a lot of chop. I mean, yes, you're going to end up with profit ranges on those. So if there's a manual option when you're trading in those, then certainly you can get out of some of those before they break down, particularly when you clearly see it's starting. This just gives it a bit more latitude than the automation can handle from that standpoint. Intraday, so here was that explosive rise that took place continued on serious positive extremes, which we marked. And as soon as the earliest sell signals came in right there, they immediately were met with, and I always look for this, when the white moves right back below and red pops back above it, you know that you're going to get a divergence to the upside on that. And sure enough, it happened. So it's just a matter of was waiting for the second one. Boom, it hit at the same time. You ended up with, the reason it's a rose color is because cyan is still under red, but green crossing below, and well, really negative from a steel standpoint, well below negative 13.5. Sometimes it can take a few bars to develop, but immediately after that, it was already printing DOC with the dark red and then the dark magenta. And sure enough, it started and got no relief, so it cascaded all the way and filled the positive extreme setup from that standpoint, and did so with red rising. And so as the market's about to open, it was just projecting a move back towards the 0% line, and sure enough, did that, broke it, and started filling some of the other positive extremes that had been listed, and then we ended up with more regular sell signals that literally filled all the way to the bottom, and then we started seeing more of the white MBI lead, which led to just continued new lows going all the way through. It wasn't until much later in the market, after we broke down further, and really just, and this is what I mentioned even before, that there would be backfill into that kind of sharp rise at the end, because there's no real substance to it, because bigger players can't build enough of a position in it, so they need to bring it back to where they can fill in between there. And that's something that I mentioned, just so you be aware of it. And that's why it was really no surprise that this did exactly what it was. And then towards the end of the day, you could see some momentum building as the shakeout started moving up. And then I looked for it right there as we started to see the gold and then even Azure rising into this up move. And so early on, you had that pivot at the magenta. And it's like, okay, yeah, it's an opportunity to start looking at the run side of it. And it was pretty decent from that standpoint, but then once it got up to those peaks, we ended up with that exact same kind of configuration where the green dips below and cyan for moving above red. DOC spread is what we typically refer to that as, and sure enough, that led to a nice little dip going, and then you have the pop, which did not survive because it immediately pivoted down, white moved above, and that's at least a look towards the 50%, and then more if it gets continued weakness. We're on this upside rise right now, right at that previous algo of 64, and it's interesting because it becomes relevant to the gamma situation with option expiration. You're close enough to 47, but below 46.50, and they're going to be converting more towards a move to 4600, and those are very big differences from what happens to option expiration. So it might see both ranges or just a little slide in between, which is kind of just nonsensical. But I would imagine they're going to still try to push towards the upside of that to help hedge in between, because the dealers, they have to buy and or sell based on which side is over leveraged, and with the volatility increase, the premium being paid for these moves is a lot more expensive than normal, and it just helps them, because as that game is wiped out with time, there's going to be a limited amount of time for some of these moves. Then they really won't care, and we'll probably see a free flow towards the later part of the day to really where the strength or weakness of the market is. So be ready for that. As always, though, I'll continue to update you on the Skype chat. Trade well. We'll talk to you later.